question is that how long will it take for the interest rates to stabilize, number one, or how long will the interest rates take to actually go up? Now, it might be 5 years, it might be the next 10 years. But now, does this necessarily mean that you're not going to be investing?
It's not like old days whereby you'd be like, I'm loyal to my bank. Whatever interest they give me, it's fine. I'll take it because I'm loyal to the bank. Now we really need to be saying that I understand that interest rates did go up, but is there a possibility that with the bond originator on my side, I can take advantage of the best interest rates at this point in time?
Man, I'm really excited about today's topic because this is what we're always hearing from a lot of people, right?
Yeah.
Now, a lot of people, we're speaking about people that are wanting to purchase properties, or people that are like, you know what, guys, I don't want to really buy a property right now because of the interest rates. Let's speak about interest rates, and is it the right time to be purchasing properties right now? Because interest rates are actually going up.
Quite interesting, especially when it comes to interest rates, because we know that they can't stay at a fixed price, not unless when you are granted the approval from your home loan, you are like, you know what, I want you to fix it. However, being realistic about it, it will change. And looking at what's happening right now in South Africa is that interest rates are really going up. So the question now is that should you be buying or not? What's up, Lebo?
So, from my perspective, right, it's neither here nor there. Never like saying that. It's neither here nor there. Now, the thing about it is that we have pros and cons.
Yeah.
And now this will work for different people, right?
Okay.
Now, with the points that we're going to be speaking about right now, this is something that you need to really consider as a property investor or as somebody that's trying to invest in property, to understand that, is it really important for me to invest in property right now just because the interest rates are actually going up or going down, right?
Yeah.
The first one that I actually have right now is that if you do not invest right now, interest rates might go down, which might mean that at some point you might actually be saving some money. So it goes back to, if I'm investing or if I'm not investing in property right now and interest rates continue going high, I didn't actually lose the money that I actually have right now. So now the question is that, is this really reason enough for you not to actually purchase a property?
Because the problem is that if you will be saying that, you know what, I'm going to excuse myself and wait for it to get to its all-time lowest. Now, what if that doesn't happen in the next 5 years? And now we really need to be careful with regards to who are we listening to, because now you find out that people that are saying that don't buy right now, they already have 20 properties. And then this was your time to shine because you had the pay slip, you had the credit, and you also had the age. Age was also on your side. And now with you, it was more of, I'm scared to go in because what? The interest rates are increasing. So ultimately what we're saying is that you really need to be cautious in terms of who you're listening to, because you find out that they are buying the same properties that you are afraid of buying.
Now, I want to give you a totally different perspective, right? Especially when you're looking at purchasing property right now, deciding if you're going to be purchasing a property right now or not purchasing a property right now. Now, put yourself in these shoes. If property investing was the only thing that was actually keeping you going, right? If the property investing was the only source of income that you were actually getting, do you really have an option that, do I actually purchase a property or not purchase a property? Prices of fish oil are actually skyrocketing. Even chips, right?
Yeah.
So now the question is that, are people in the business of using oil saying that, I'm not going to be purchasing oil right now because it's at its all-time highest? Of course not. We always need to find a way of how do we actually restructure everything. Does this mean that we're going to be buying cheaper oil, which might cause us to actually decrease the number of people that are purchasing our products? Or does it mean that I need to actually take my prices up in order for people to actually, in order for me to make a profit, number one? So now, let's bring it back to property investing. If I'm saying that I'm purchasing a property right now and I understand that interest rates are actually going up, what needs to happen? It's either I need to bring my prices down or I need to be comfortable with making a lesser profit than I would have made, right? Nero doesn't like making a lesser profit. So which means that he needs to negotiate the prices down. Now, if I'm going to be negotiating the prices down, when does that actually happen? That happens when you purchase the property. So once you've purchased that property and it doesn't really make sense right now because interest rates are at the all-time highest, we need to really understand that what is the other way, or what can we also do in order for us to actually decrease our prices there?
For me, the next point with regards to interest rates going up, especially as a property investor, I liked how you put it, right? Because at the end of the day, we need to invest. Age is it's not with us. And now we need to create cash flow in a sense whereby I'm building sustainably properties that will be allowing me to scale. So if I'll be, let's just say that this year I feel as if interest rates are going up, and then I'm going to wait until next year. And then the question is that, looking at my track record, because I waited, now how will that affect my growth? We really need to question that. If somebody's saying do not buy right now, how is that going to affect me? And when will the right time come? Because trust me, there won't be a call that's coming in from the banks telling you that right now is the right time. It's more of adapting. And this is what us as property investors need to do. With the content that's out there, with the experts that are out there, let's have a conversation and adapt in the environment that we're finding ourselves in. Because as Lebo did mention, yes, the interest rates are increasing, but how can we also thrive in such a situation? Now we really need to understand the importance of a bond originator at this point in time, because now it's not like old days whereby you'd be like, I'm loyal to my bank, whatever interest they give me, it's fine, I'll take it because I'm loyal to the bank. Now we really need to be saying that I understand that interest rates did go up, but is there a possibility that with the bond originator on my side, I can take advantage of the best interest rates at this point in time?
Now the question would then be, right, the follow-up question to what Neil was talking about right now is that, say for instance right now, right, people are saying that we need to wait for the interest rates to stabilize, right?
Yeah.
This is what I'd like you to do. Please check over the past 10 years and check that how long did the interest rates not change, right? Now, if we're saying that the prices or the interest rates were actually fluctuating within the past 5 years, this means that we wouldn't have invested in any property within the last five years. Now, the question is that how long will it take for the interest rates to stabilize, number one, or how long will the interest rates take to actually go up? Now, it might be 5 years, it might be the next 10 years. But now, does this necessarily mean that you're not going to be investing? I mean, for me, property investing is my full-time game. And if I don't invest right now, I'm not eating anything. So I need to really invest right now and understand what am I actually doing. The coin that I would like to actually put forward, right, is that opportunity cost. For those of you guys who did economics, man, you know what I'm speaking about. So opportunity cost, we're basically speaking that if I was to not purchase a property right now, right, I might not be in a deal, and that might be good. However, at the same hand, I might go into a good deal and also still get out with a profit. So now the question is that, are you willing to lose out on a deal right now in order for you to wait for the property market to actually stabilize? Then only will you actually go into property. Now, for me, that's not something that I'm looking to do. To waiting until the property actually stabilizes. I'm going in a deal right now, man. If the deal is right, the numbers are right location, trust me, I'm signing that offer to purchase now.
It's crazy what's happening on the internet in terms of the social media and what's also happening in the practical world, right? Because we've noticed something with the properties that we've been inquiring on. I mean, we've been calling estate agents. And the funny thing is that majority of these properties are sold. And then only to find out that on the internet, there's some people that are speaking about market crash here and there, or interest rates being too high. Yes, we're hearing that content, but in reality, people are buying properties. That's why I'm saying that we really need to be careful when it comes to the content, because sometimes you might get that fear of interest rates being too high or a market crash. So again, now we need to be very careful as property investors. Understand that speculators will speculate, and you are a property investor. So if you listen to speculators, it's going to be that thing whereby you're putting your toe in the ocean and then you're getting it out again. Ultimately, what we're saying is that
put that leg in.
Dive in for it, man. Yeah.
Now, the last point that I would actually like to speak, right, was the one that you just spoke about, surviving the market crash. Now, there's somebody that I've been following, right? And every year it seems that they keep on saying that this year the market will crash. Every year they'll do that. So now the question is that, when does the market really crash? Now, I do understand that in 2008 it did happen that the market crashed and real estate was actually in a bad condition in terms of its market, right? However, when will it happen, right? Now, we don't know for sure that it's going to happen this year. Now, they're saying that it might happen within the next 5 years. If it does happen that it doesn't happen in the next 5 years, does this mean that you wouldn't have actually invested in any property for the next 5 years? let's really think about this content and put yourself in the shoes whereby if you were a property investor right now, really focused on property investing, would you or would you not invest in property? Please put it down in comments, man. Please put it down in comments. If you were a full-time property investor, would you say that you're not investing in property because there might be a possibility of a market crash?
So ultimately what you're saying is that we really need to understand our exit strategy. I mean, but then it's difficult again when it comes to the market crashing, because now we don't know to what extent will that affect us. So it's more of we're just jumping into this pool because we ran our numbers, we had an exit strategy, and then if the market will crash, we'll hold on to it.
Of course.
Yeah.
Of course. Now, I want to show you something, right? We used to look at this a lot of times when we were looking at economics, right? I'm not sure if you can see it. There we go. So now, whenever you're looking at, I would invest. Of course you'd invest. Look at this, right? Now, the only time we can draw this graph, right? The only time we can draw this graph is when it has already happened, right? So now, this point being the lowest point, we do not know where this point will be until we are at this point here. Right? We do not know this point until we at this point over here. So what I'm basically saying is that with economics, yes, you can predict when something can happen, right? However, we can't be 100% sure that it is actually going to happen at that particular point in time. Like Neo always says that the weather forecast might be that today is going to rain. However, it might be really sunny today. So now the question is that, are you going to stay indoors because the weather forecast says that it would be raining today?
So ultimately, in closing, what we're really saying, especially when it comes to the interest rates, the market crashing, and then how to position ourselves, is that let's be aware. We're not saying jump without an exit plan. Let's be aware and adapt to the environment, because last thing you want to do is be that person who was holding on to the opportunity, only to find out that after 5 years, people will still be saying that it's coming. We're not saying that it's not coming. We're just saying that let's take decisions that will ultimately strategically position us. Because ultimately, man, I'm hungry. I don't want to lie, man. I don't want to be that guy who'd be like, you know what, I should have taken that opportunity. I'd rather go down saying that I did best with the credit that I had and the cash that I have. So from my side, personally, I'm not going to be holding back. It's all system goes. Like even right now, we're looking for a deal. We're ready for a deal. Whether the interest rate is going to go up or not, we are definitely going into that. Yeah.